Hello, traders. It is Monday, April 20th. Let's see what the market's doing today. We had a bit of a sell off early. You can see this drop right on the open. I'm not too worried about it though, because you can see all of the gains that took place on Friday. Those were stripped away. Those were the last hour gains. We simply gave that back on the open, and the market's been able to grind back. You can see how the low from Friday was able to find support. If it had failed, which was a possibility in here, we would have rolled over and started to fill in this gap instead of filling in this gap. But as it played out, had to be very, very cautious on the open. I've been relatively passive today. We had a couple of nice, really big bars and then another compression. Tails above body, nothing really going on. The 1OP indicator starting to fall off. So this is a time to be cautious. And then we got another long green candle. Still cautious because it's only one bar. And then what happens? We start to see a decline here and we give up all of the gains that open from that long green bar had to hold. And look at this. Now we've got this upward sloping trend line right here that has been breached on a 5-minute basis. We've got this negative 1OP reading, so I believe that we're going to continue to drift lower in here. Overall today, action has actually been pretty subdued. We've got a lot of compressions in here and not a lot of price movement, but there have been some stocks that have really provided some fantastic opportunities. I've done well today, but members in the chat room have done incredibly well because they basically, from the open, had just been pounding some of the stocks on the bull run search and relative strength 30 searches. So overall, if I look at what the market's going to be doing on a day trading basis, I think we could see a little bit of weakness in here. So far, the price action has been very bullish throughout the day. We really haven't had any meaningful pullbacks. So I think the low of the day, I think the support level from Friday's low is going to be fine. I think the open today gets preserved. And we've got a lot of earnings coming out this week. We have 20% of the S&P 500 is going to be reporting earnings today. Netflix will be a big report tomorrow. It's a mega cap tech stock. Everyone's expecting a good number. As long as the mega cap tech stocks have not reported, the bid to the market should be strong. Shorts are usually pretty passive until those big companies have reported because they tend to outperform. There's a lot of optimism that gets built up into these earnings, and then once they report, I think some of the air is going to get let out of the balloon. So let's take a look at that daily chart and see where we're at. It is still too early to short. I cannot emphasize that enough. A lot of people in here thinking, oh, I hate what's happening with coronavirus, the economy, I'm going to get short. You're going to take some pain along the way. So we need to wait for technical confirmation before we can short. We've got a really nice upward sloping trend line right here, and I can draw that in. I'm trying to pick a point right here, and right here looks good. I'd take the GTC. I'd drop it on that low right there, and I would select that candle right there. So you can draw an upward sloping trend line as the market continues to go higher. It will go higher eventually when it's breached. Then you'll know that you may have reason to start thinking about shorts. If I go into a daily chart right now, I can see that on a 200-day and 100-day moving average, we could be hitting resistance here pretty quickly. And you can see that's right around the 300 level on SPY. If I go into that weekly chart, you can see how we're right up on that 100-week moving average. Now, we took profits on our SPY position. That was my first target. I want to be on the sidelines. I think that as earnings season unfolds, we're going to start to see some weakness. Why do I feel that way? I feel that the good news is priced in to a degree. Everybody is waiting for the coronavirus to start decelerating the spread of it. That's happened, so that's good news, but that was expected. And I view this like a tornado. Sunny skies in February, everything's great, economy's great. All of a sudden, the skies get dark, the tornado comes in, and it flattens everything. And now the skies are sunny again, the virus is gone, but we have all of this destruction that we need to deal with. And this is going to be a massive recovery process. Every single week that this lockdown persists increases the chances exponentially of a credit crisis. So if we can get through this the first week in May and a lot of businesses get back to work, fine, we can grind our way out of this. But we've already spent $6 trillion and we haven't even gotten back to business yet. If this lingers through May, it's not going to be good. So I feel that the early bounce was very nice. We've retraced about 50% of what we sold off, 50% of this range from the low to the high. We've been able to recover it. We're going to start to see some resistance in here. So we need to be very, very careful with our longs. We had a lot of out of the money naked puts expire last week. That was perfect. Maxed out on those. In my last video that I recorded a few days ago, I had a pretty balanced position of bearish call spreads and bullish put spreads. Speaking of which, my last trade that I showed you was that Apple bearish call spread. Take a look at how Apple's doing today. Apple struggling. You can see it trying to fill in this little gap right here. And it's staying below that 100-day moving average. We sold that 285, 287.50 call spread for 50 cents, and it expires this week. Everything's looking pretty dang good on that one right now. So let's go in and take a look at some of the stocks that I've been trading today. Early in the day, I got long. Let's see here. I got long BLUE. That was a nice trade. And I got long in here. I made $1 on a $60 stock. That's awesome. Love that. CRWD. I'm going to show you that one as well. Got on that right out of the gate in here. Took profits $1 higher on that. That's another $1 winner on a $60 stock, which, by the way, drum roll, here is the pick of the day. This is the stock I think you can be long into the close. If you see this video after hours, I think you can look for an entry point tomorrow. I think CRWD sets up well for a swing trade. You can see the really, really good relative strength, and this is what we watch for. We'll go back to the 5-minute chart on the SPY, and you can see that a little bit of support forming here, but in general, we've been down during the last half hour. What's the stock done in the last half hour? Moving higher, trying to take out the high of the day right now. Really good sign. That's why we like it on a day trading basis. Excellent volume today. Boom. Through that horizontal resistance level, long green candle closing on its high. We've got beautiful support here at the 200-day moving average. So let's construct a little swing trade here. Let's try and sell some premium below that 200-day moving average. We're going to go into the May 1st expiration. I think that April is a little bit too close for us to get any kind of decent premium down to that 200-day moving average, which comes into play right at that $62 level. So you can see here 62.67 is the 200-day moving average. So I would look to go down and sell the $62 put and buy the $61.50 put, and I would be looking to do that for a 10-cent credit because we have 50 cents between the strike prices. That would represent a 25% return on your investment. So you'd have to put up 40 cents in margin requirement on that. You've got a dime that you can make on it. A dime divided by 40 cents gives you that 25% return. Really like this stock. So I think this is going to be a decent one. This is my swing trading and day trading pick of the day. And I'm going to go in and take a look at a couple of searches right here. Let's go into relative strength 30 and see what we've got here. I'm going to click through this very quickly. And these are all stocks that have been strong relative to the market in the last 30 minutes. So you're going to see market down, 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 stock up, up, up. W, wonderful. Look at that strength. If it weren't a retailer, it probably would be my swing trading pick of the day. And I'd noticed it back in here, but I really didn't want to be long a retailer. Plus, we had the 100-day moving average that we can lean on. But it is an online retailer, so that really helps. But in any event, that $80 level would have been great for a bullish put spread. You can see how it is through the 200-day moving average. Earnings on May 5th. Maybe there's room in here to squeeze a bullish put spread in with expiration this Friday. But really nice looking stock. Let's go back to that 5-minute chart. You're going to see lots of relative strength. Nice relative strength. That one's a little bit of a pop. I don't care for that as much. I'd rather see a grind higher than like that. Grind, 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 grind. That's what I want instead of a one candle pop. So this is what you should be looking for. There's Abbott. You know I liked Abbott from last week. That baby is doing great. I showed you an awesome bullish put spread on that one last week. That's working out beautifully. So that's all you have to do is start clicking through this list. It's hand delivered to you. So if the market's stable to moving slightly higher, and now I'm actually noticing this 1OP indicator is really falling off, which is normally very bearish. The fact that the market's able to hold the bid here tells me that it's going to cross pretty soon, and we're probably going to see a rally. So this would be a good time to start finding these stocks with relative strength and to load up on them. This is our roadmap. This indicator is our roadmap on what we should be doing. We wait for those big spikes. You get a cross like this that tells you up in here, start taking profits on your longs. You do not need to go short, but you need to start taking profits on longs. And when this did not materialize into a market decline, there was no reason to short. Simply wait it out. Now, if you get a bullish cross down here, tells you it's time to start loading up on your longs again. So we wait for these windows of opportunity to set up. See if I can find a couple more for you. SGEN, that's nice. TSCO, that's grinding, but a little choppy. I don't like these long red candles in here. Prefer to see a little bit tighter price action, but not bad. Tradable, definitely. And let's go into Bull Run and see what we can find there. These are all going to be super strong stocks. RAD, nice recovery after last week. Woo, is that a strong one? Sold off after the number last week. Go into that D1 chart, you can see that drop. Now it's back above the 100-day moving average. We get a bearish explosion alert. NVAX is a stock that we traded this morning on a bullish explosion alert. The pop-ups are just like you saw there, except they'll be green if they're bullish. We got one out of the gate this morning, and whoa, was that a nice one. A lot of people in the chat room were all over that one. So super nice trade from $22 up to $24.50. All you need is one of these stocks. You buy 1,000 shares, you've paid for option stalker for a year. These bullish and bearish explosions are money. So in any event, NVAX actually looks pretty decent as well. See if I can find you maybe one more that's setting up well here, and we'll call it a day. Going through, this is really nice. GBT, ICE, looks pretty strong, especially once it got through the high of the day. Let's take a look at that daily. Trying to get through the 200-day moving average. If it can get above the 200-day moving average today, then I think it's got a clear path to go higher. It certainly is challenging it right now when the market's been pulling back. So, mind you, we're right at the 200-day moving average. 91.23 is the 200-day moving average. So we're going to go into the M5 chart. 91.23, you can see how it just got through the 200-day moving average, a major resistance level when the market was pulling back. That's a pretty good sign that the stock is going to be able to get above that MA and continue to fuel higher. So ICE looks good as well. GSK, take a quick look at that. That's a nice grinder getting through the high of the prior day. Go into the D1 chart. Nope, it's got resistance, 100-day and 200-day moving average. That's the process that we go through. So you wait for the 1OP indicator to set up, you look at those charts on a 5-minute basis, and then if the stock looks really good and you see sequential long green candles closing on their high and the stock is grinding higher, take a quick look at the daily chart, make sure that you're through any major resistance levels. If everything checks out, boom, you got a great looking trade. That's the process we go through all day long, and then we post our trades in the chat room. So hope to have you aboard. If this sounds intriguing to you and you're a day trader, I hope you give the 2-week trial a try. If you like the content, please give this video a thumbs up and make sure to sign up and subscribe to the YouTube channel and turn on your notifications so that you don't miss any of these trades. I do schedule a daily video every day around this time, but I also sneak a lot of other videos in. I posted one last night. Sometimes I post them after the close. Sometimes I post them before the open. I never know when I find something that I really like. So turn on those notifications and subscribe to the YouTube channel. Thank you. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.